Boom, there it is. And when we were preparing for this decimation of the market, what have I been talking about the past few days? The tone of the Fed, quantitative easing, everything in between. Everything today was verified. We're going to break down everything in between so you don't miss an absolute thing, because when you're at the king, all you do is swing for the fences, boys. Woo! It's looking good, boys. It's looking good. Let's get into it. Now, before we get into that stuff, I got to tell you right now, consider liking, consider subscribing. Every single day we make videos here for you so you are prepared on the market. You know what to expect. For the past 6 days, we've been talking about what was going to happen during this meeting. I got a lot of heat. That's the bell right there. I got a lot of hate. But you know what? On this channel, we stay transparent. We stay to the point. We stay honest. I don't dictate my decisions or my thought process based on what you guys say. I do it based on my opinion on the market, and I'm going to stay true to my guns every single day here. Win or lose, I don't care. All you have is your word, and that's what this channel is all about, is integrity and a place where you can come and expect transparent content, not surrounded about what my trades are doing or to get clicks. It's all about transparency. Consider liking, consider subscribing. Now, the first thing I want to do is go over this. This is the Fed's statement. This was before Powell came out, and I took a lot of notes from what Powell said. But all you needed to do was read this. And when this first came out, we were live on YouTube and we were talking about it. The first thing he says here is recent indicators point to modest growth in spending and production. Job gains have picked up in recent months and are running at a robust pace. The unemployment rate has remained low. Inflation remains elevated. Why did they put this at the front? Was it because that they wanted to make it secondary? No. They wanted the foremost understanding to you, the public, and me, that the Fed's job is to handle inflation. Their job is not what's happening with banks. It's none of that. Their job remains inflation, inflation, inflation. Okay? That's the number one job. Follow-up statement, the banking system is sound and resilient. Now, this is a statement I could go on and on about, but that's the only thing. The bulk of this statement here, this is the most times I've ever seen the Fed in any statement mention the word 2 and percent. Okay? The number 2 and percent. Okay? 3 times. Actually, maybe more. Let me verify. 1, 2, 3. And then they mentioned it a few times throughout. 2% is the goal on inflation. It has not changed. It has not shifted. We had a lot of answers here. So let's dissect a few things. Okay. I'm just going to go over a quick rundown of my list. I'm going to go back over the charts and go over the trades that we have mentioned. Have they tied their hands? Has the Fed tied their hands as far as can they continue to raise rates to fight inflation? Okay. That's one of the major questions we need to talk about here. The Fed also hinted at possibly pausing rates. And they said they do not have to only attack inflation by raising rates. We talked about this. And they talked about this in the live stream. And then we're going to talk about this today. And the other area combined with attacking inflation by raising rates is detrimental and will immediately hurt the economy. And that's why we're dropping right now. Have we been doing quantitative easing? Right? We've been talking about that. I said we weren't doing it. The Fed answered that. Okay. Recession. Are we in a recession? Powell, this is the first time Powell has answered this question and not said no. You know what his answer was? It's hard to tell because typically recessions are linear. He didn't deny it. Okay. That's where we're at. That's what we're thinking about. I'm going to give you the quick answers here. I'm not going to drag it on. 1, have they tied their hands? His answer was no. He said no matter what, if they still have to raise rates, they will continue to do so. Number 2, are they going to pause rates? He said it's possible, and they can fight inflation by making tighter rules for these smaller banks for credit ratings. So that means that credit requirements for you and me, again, like we said, like we've been talking about, the only people that are being affected here in the large scheme of this is big money for the good. That's who really is being looked after right now. If we look at it, we've been talking about it. People called me a shill, said I was really just pushing down, the stock market. I was being a bear and I wasn't saying facts. But ultimately, when we look at it, they're not going to increase FDIC insurance. They're not going to, they already said, Yellen said today. And when we look at what's happening, and we look at who's going to get hit from this, it's going to be you. It's not the big banks, it's the small banks. Like we've been saying, right? The Fed gave liquidity to the big banks to loan to the small banks and get paid for that loan as well. That's where we're at. That's our current economic circumstance. Let that sink into you right now. When people were saying, oh, we might get a pause. If we got a pause today, what good would have come from that? Right? The whole expectancy of us moving up like this over the past few days on the 4-hour was the expectation of cuts coming this year. Powell killed that. He said, based on our projections and based on where we're at, unless we get down to 2%, there's no cuts coming. His words, not Tyler's, don't attack me. He followed into saying, what will credit rates do? Hopefully. Okay. Unemployment will go up from credit ratings. That will 100% go up from it. It's going to slow growth. We already have our expectations on growth in GDP. It continues to drop every single Fed meeting that we've had. Okay. We talked about all that. Core CPI, he mentioned it. It's still elevated, still a problem. Everything that we've mentioned here, he has gone over. His thoughts on quantitative easing. Again, the same exact thoughts we said here on the channel. What did he say? He said, if we look at it, quantitative easing, when we're buying things. We're buying assets, right? They're not buying anything. They're giving money to these banks to loan out to smaller banks at rates. The Fed's not making money on that. He said that is not easing. They're going to continue tightening. These were the nails in the coffin today. Now, am I saying you're going to drop down to lows when we look at this chart? I am not saying that. I am not saying that you're going to drop down all the way back down to 200 SMA. But what I will say, and something that we've been saying, is we have a lot more room to drop now. This whole move up, right? How much more room do we have back to the 200 SMA? Just back to where we were last week. We have 800 points. 800 points just to get back where we were last week. That's if nothing even changes. Because only more bad things have happened since last week. The bank said we were going to pause rates. Elon Musk said we should cut rates by 0.5. Bill Ackman, all the boys got together at the barbecue, apparently. I wasn't invited. And they said all this nonsense. Everyone's been lying to you. Again, that's the point of option drops. When there's no clarity out there, I want to be someone that you can come to and get a good opinion from. That's all this channel is an opinion on the market and what I just see happening. Do your own DD, but I just translate it to how I see fit. I got I got a concerning, and I want to highlight this though today. I got a concerning comment on yesterday's video saying that I have been pushing FUD, which fear, uncertainty, and doubt, which I don't think I've said anything that hasn't been true here on the channel. If I've said anything false, I will come clean to it and I will acknowledge it and say I'm sorry. Anytime I misspeak, I always come clean to you guys and I always say, hey, I misspoke, this was wrong, etc. Because transparency and accountability are something in the finance space that I think has to be present. Then we have to acknowledge transparency in the space because at the end of the day, whether I like it or not, whether this is financial advice or not, and I'm not giving financial advice. I'm not telling anyone what to do with their money, right? I think you need to do extreme DD and not trust anyone on this platform, YouTube, Twitter, any social media. But I have to acknowledge that I have an impact, no matter what I say or think, right? And people can claim all they want, but I have to have that subconscious thought in my head that someone's watching this video and it's impacting their decision making, okay? As you receive knowledge, it will affect the way you make decisions and look at certain things. Okay. And so I am under that understanding. That's why I give both sides of it. Right. And so when we look at this potential double top, almost 800 points of downside back to the 200 SMA, it's bad. Going over to ES, looking what's happening here on S&P futures. I mean, right to our supply level we mentioned yesterday. Go watch the video yesterday. Right into it. Rejection. All the way back down almost to the demand. We're almost already back at the 200 SMA. I'm not making this up. I'm not manipulating the charts. This is all from yesterday, right? Go watch the video. Don't trust me. Go watch what happened. Watch what we said. And it's not to say that I'm right, anyone's wrong. The point is to show that the process that we do here, it works, right? That's the point, that the education here works and it's all free. Everything here is free. Yeah, we have Discord, but no one has to pay to get educated. A lot of the stuff here and a lot of stuff we mentioned in Discord, we mention here as well. We just can't handhold as we're going through it. So right back down to our level. If you break below the 200 SMA, you're probably going back down to your big demand. And again, where does this demand stem from? You got to go all the way back to about the daily time frame. Real quick, let me see. We're going to go really quick to the dailies just so you can see real quick. It's this massive demand down here. And I believe if you break this demand, and you break and make a new local low below 37.88 on ES futures, I believe ES futures make a new low. My personal opinion. You do have the 200 SMA on the weekly, but I'm going to say this is your biggest range to be watching right now. It is massive. You sat here for 14 trading days. It was just ridiculous. It was crazy. So that's my like overall next target if you break the 200 SMA on the daily chart. And the 200 SMA, you can see it's on the daily. It's right about here at like 39.40. I think that gets tested either tonight or tomorrow. That's what I'm anticipating. Now, let's go to some of the trades I am in, and I'm actually only in one trade. I am in IWM. I've been mentioning IWM a little bit on repeat. I try to just share my opinion, what I'm doing in the market, and then you guys make your own decision from that. That's all I can do here. We look at IWM. We were trading at 177, 176 today. I was very clear about my position here. And you can see that we are breaking back down to swing lows down here. I will say this is target number one, 100%. We are at target number one rather quickly, to say the least, right about here. Huge level, you're at it. You break below this, in my opinion, you're coming down to around 162, 163 roughly. IWM is the weakest area in the market, and it's been a great look of a risk on, risk off mentality because Bitcoin's been so disconnected as well. And we can't really look at bonds either because they're getting kind of manipulated, but those are going to start shooting up pretty soon as well. And once bonds start shooting back up, we're going to see a lot of these issues with banks start to come back, in my opinion. And that's why I think things are going to get even spicier with the banking category. So if you're looking at regional banks such as KRE, I believe more pain is most likely coming. And not even to just KRE, but most likely to overseas banks as well, because we saw what happened in Europe today. They said that they cannot afford to stop pausing because inflation may actually become entrenched and the wage price spiral is dire over there right now. Their words, not mine. Don't attack me. Again, so IWM, target number one, you're up really nice. And giving you just some clarity, I can't go over the trade because I'm still in it. And I can't use TradeZilla. So if we look here, I got into IWM yesterday at 470. You actually got better opportunities around $4. You could have got so many entries today. They dropped all the way down to $4, but they're over $6 to end the day. So awesome there. Trades are just looking really good. I anticipate these things to go just bonkers once you absolutely collapse here. So we're happy here. That's my viewpoint of equities and specifically the indexes right now. I'm going to go over some stocks I'm liking as well. Let's look at the order flow coming in here. So one SPY, everybody and their mother just went short, as you can see. 421, massive orders stepping in to the market now. It doesn't look that bullish to me, boys. I would love to hear from the people that want to talk all the trash about the channel and where are they at now. That's the difference between me and I would say almost everyone else is I will come back and say, hey, I'm wrong. And that's the problem with this social media thing is that people don't come and clean about where they're wrong, where they're right? And they focus more on the wins and the success and the Lambos and the making money and not showing you both sides of it. Right? That's what needs to be happening here. But again, those people will not show up. They won't be in the comments in this video. They won't be in the next video, but they'll show up maybe when I'm slightly wrong next time. But even now you can see the drop is probably happening here. IWM, the puts here have already been established. That's what we went with IWM. No more trades coming in there. Probably more will come tomorrow. We'll see. Qs more coming in there. SPX, you saw some calls coming in beginning of the day, but again, not too interesting there. VIX, I think VIX is going to start exploding. You've already seen massive calls coming in here, but VIX is still, I think VIX has a lot of room to go. So let's look at a few things before we get too far in. I'm going to go over bookmap as well. ES, I did a bookmap live earlier, but you can see here. So basically you had some decent wall set up here. Once FOMC came out, and bookmap, their link is down below if you want to check them out. This is basically level 2 data just visualized for you. And so you can see once FOMC came out, all the walls went away. So big buyers and sellers took their orders off the market because obviously volatility and you just don't know what's going to be said. Once that came out, you saw a slight wall be established at 40.75, and from there on out, it was nothing but downside. You can see you even tried to hold, you had buyers trying to hold you up, but you could not withstand the heat here. So the real question is going into China's opening, going into London's opening, how do we react? How do we respond here? Do we get any love? Do we get any bounce? Again, London, they just raised rates once again, so I anticipate more downside to occur here. You did see a little bit of iceberg buying happening here, a pretty big order, so I'm definitely interested with that. But again, we need to start seeing what's happening here, but we're seeing that CVD and the volume definitely spiking to the downside. What's another thing we've been talking about here on the channel? It's been the volume every single day. What's been one of the big indicators of maybe saying that this might be a trap to the upside? It's been your volume. As you've been trending back up, so you establish your lows right here at 388, right? You establish those lows on SPY. You have your actual low here at 380, but you bounce back and forth, and then you start actually moving up here on ES and SPY, and then your volume declines from that day forward, continues to decline. Where does volume spike again, people? Where does it spike again? Volume starts to ascend once again as sellers step back into the market. Now, I'm not saying, again, you do not have to test lows. There's no confirmation of that yet. But again, the warning signs were there, okay? That's all I'm trying to say about this. Now, let's go to a few stocks we're liking, some setups, give you guys the juice, the Salzul, if you will. Now, when we're looking for the Salzul, we're looking for opportunity. Opportunity is the name of the game. Now, IWM, this ship has most likely sailed. I will be holding a lot of my position, but I still like it. I think you can easily come down deeper. And I think IWM is probably the sector that will get hit the hardest from a risk-off standpoint. Everyone and their mom wants to short NVIDIA. Now, NVIDIA is a very tricky thing to go short on, but as of right now, I'm not looking for any NVIDIA shorts. You're clearly trending to the upside. You just can't short it. It's the strongest sector in the market, not touching it. Tesla. I love Tesla right here. I think you're preparing for pain. But what I will be saying right now is Tesla, the level you need to be watching is 187. You break below 187, and I think you will start pushing back down to lows. I'm going to be clear about that. If you break below 187, that's where I go short on Tesla, and I start hammering that thing once again. I have no problem hammering the short again on Tesla. It was still a great trade. I would do it all over in a heartbeat. I'll be looking to short Tesla underneath 187. Next up, I will go over also really quick. Sorry, the one I like. I'm just trying to see what I liked. One sec. I can't find it. It was Apple. So looking at Apple, also really big level here. If we get back below this level, right back below 156, you break below 156, I believe Apple can retrace back to its 200 SMA on the daily, which is around 148, 147. It'll probably rise closer to like 149. Keep it on your radar. Very much so watching Apple, okay? Apple will track and follow the SPY pretty closely, in my opinion, as well. I love AMD and I love NVIDIA. I think they have great opportunities, but you're just not getting... You're not making lower lows. You're still making higher highs and higher lows. So you can't do anything there. But so far, my favorite thing right now is Tesla and Apple. I'll have more plays coming out for you guys, but I can't force anything. I want to look at VIX really quick also. VIX, I'm telling you now, you have a lot of upside risk here. If VIX gets back above, again, we keep talking about it. VIX above 24 is really the level you want to see. You're at 22. You get back to 24, I'm looking for volatility back up. So VIX, we got to watch this very closely. Going into DXY, what's happening here? You saw some inherent downside originally because there was a lot of mix-up of what was being said with the Fed. Powell made a comment regarding pausing rates, but then he also made the comment of no rate cuts are coming for a long time. And then we started seeing the bond and DXY start to move back up. Okay, I think DXY will start tracking back to the upside, personal opinion, unless we get devaluing from other countries. Going into yields as well, you started to see this happening here. We started seeing a little bit of a bounce, and then they came back down. I believe yields will start bouncing, my personal opinion, based on what was said. Rate hikes are coming still. Credit ratings are you're gonna start seeing those rates go up for your credit cards as well. Consumer credit will get hit as well. So I think bonds will start to rise again. If bonds start to rise again, it's the number one red flag when you're looking at banks and potential a reset on what's happened with some of these banks, especially the smaller ones, because we're going to start seeing requirements start to tighten as well for these banks. Again, lots of big concerns across the board for me. That's what I'm looking at. If you have questions, please comment down below. I would love to answer them. I'll have a video coming out for you guys tomorrow. Congratulations if you got an IWM with me. I'm happy for you. But at the end of the day, you did your DD. You're responsible for it. So congratulations. Pat yourself on the back. Another great day of trading. Happy to have you guys. Happy to have the channel. The best subscribers there are.